Hey, what's up, guys? This is Taylor. It is Wednesday, the 23rd of April. Hey, what's up, Lorna? What's up, Omer? All right, quick sound check here. Looks like we are G to G. Yeah, long time no see. But all right, y'all. Good pop here today so far. What I'm looking for would be a few end of day squeezes, potentially for an overnight long. The key for that would be, can the indexes get a good strong close back above their daily 21 EMA? Which, if the market were to close right now, QQQ would get a decent close back above that. But yeah, looking for a few things here. But as far as this session, they wanted me to jump on the mic and talk about the analysis of a trade. And I think as far as getting a good use of our time, I don't think it does y'all too much good covering trades I've already taken. Made a little cash on MicroStrategy this morning, made some cash on Bitcoin futures, I think yesterday. So let me break down what I think, a couple of components of a good trade opportunity. And then we'll work on a couple of recent examples, or I should say current examples. So two things I think are really important. One would be relative strength. And then the second thing would be, and we all have our own version of this, or we should have our own version of this, but you want to find a relative strength name. Then you want to look for your A plus, I'll put it in quotations, relative strength name, and then your A plus setup. And that A plus setup is your proven setup where you've got, think of that stars have aligned kind of moment in time. All of your trend criteria, structure criteria, you got the squeeze, stacked EMAs, everything coming together to offer you a lot of edge. I'm a firm believer you only want to trade those kinds of setups, and I think you can kind of up the ante trying to only do that on the best relative strength names. So my process there as far as trying to find relative strength, and I'll grab a link here and put it in both the chat rooms. You folks here in the Essentials, you're familiar with this. Folks on YouTube, let me drop a link here in the chat. All right, but this is called the Big Three sheet, and I view everything through the lens of three things: trend, structure, momentum, and that's the Big Three. So when you look at my chart here on Toss, right, I've got labels for the trend, I've got labels for structure, and labels for momentum, and those are basically the checklists I've built up over the years. Best case scenario, the bulls have 15 different things working in their favor. All the things on my trend checklist, all the things on the structure checklist, momentum. When the bulls are as strong as possible, on the Big Three score label, we get a positive 15. Right, that is the 8 or so trend criteria, the 5 or so structure criteria, etc., etc. That tells me, does the chart lean bullish? Are we bearish? Are we neutral? All the above. So then what I do is I'm taking that score from that one given time frame, and then on the spreadsheet, I'm taking that score from a total of 8 different time frames. I got the weekly chart, the 3-day time frame, 2-day time frame, all the way down here to the 30-minute time frame. So the absolute strongest, strongest total score possible, when you add up all the different time frames, would be a positive 120. All right, so strongest score possible would be positive. That's an ugly 120. A positive 120, and then of course the weakest score would be a negative 120. So what I'm doing here on the spreadsheet is I'm getting the total score for the indexes, right? QQQ, S&Ps, IWM, Dow Jones. I call these the Big 10 names. It's pretty much my primary watch list. Got Netflix, Broadcom, Apple, Google, Amazon. And then I have all of the sector ETFs, XLP, XLU, financials, the ARK ETF, semiconductors, big tech, energy. Trying to get a sense of, for one, collectively, am I in a bullish, bearish, or a neutral market? Right now, we're back into a little bit more of a neutral market. Neutral kind of means it's up for grabs. Bulls want it, they can grab it, maybe take it a bit higher. Bears want it, they can grab it, take it right back down. So trying to get a sense of overall market-wise, are things incredibly bullish? Are they super bearish? Or maybe a little bit more just range-bound and choppy? And that dictates how I'm looking to go and trade. If the scores across the board are as bullish as possible, I'm thinking long only, and I'm thinking very much a swing trade approach. Right, I want to go find relative strength names, and I'm looking for weekly squeeze setups, 2-day squeeze setups, in a bigger time frame action. If the scores across the board are incredibly bearish, I'm thinking short only and maybe swing short. Getting short in squeezes, shorting rallies back to a 21 EMA. For a good chunk of this year, things have just been a lot more neutral, and that's led to a lot more of a day trade approach. I'm not focusing so much on a weekly, 2-day, or a daily squeeze. I'm drilling down looking for a 1 hour, 30-minute, 15-minute squeeze. One good plate of opportunity has been the gold futures. I think we've taken about 8 or 9 different longs in the gold futures. We made cash on all of them. Right, good example of find a name showing signs of relative strength. Then go find what I call my A plus setup. Right, perfect trend, perfect structure, the squeeze, all those beautiful things. Um, in more of a swing trade market, I'm looking for that moment in time on bigger charts, weekly time frame, 2-day time frame. In the current market, I'm thinking a little bit more, 1 hour, 30-minute, 15-minute. But point being on that spreadsheet, number one, am I in a bullish, bearish, or neutral market? And then number two, who's the best, who's the worst, and who's just kind of uneventful? So in terms of trying to find signs of relative strength, looking at the Big Ten basket, Netflix obviously sticks out. Total score of 114 for Netflix. Again, 114 out of 120 is really impressive. Second place in your Big Ten basket is Broadcom with only a 21 out of 120. And then Tesla's got a -4, Apple -6, dropping all the way down to NVIDIA -38. So in terms of relative strength on the Big Ten basket, Netflix is a clear standout. Looking down here at the sector ETFs, you got silver, XLP, gold, and then you got the Bitcoin basket and utilities. So a couple that I picked out, and a few are watching in the room right now, would be, for one is Netflix, two is going to be Bitcoin, and that could be the Bitcoin futures, that could be GBTC, that could be IBIT, and then if you look over here on this master list tab, we got about 200 or so names ranked from strongest to weakest. We could look at McDonald's, we could look at Duke, Coca-Cola. All right, I want to try to buy these kinds of names and these kinds of scores, versus coming all the way down here with these, negative 100s and trying to call for a bottom. Make sense, guys? So that's pretty much the first step of the process. Get a good feel of the overall market environment. Should I lean bullish? Should I lean bearish? Should I be thinking swing trade, day trade? And then who's top dog on the board? If I'm actively looking for shorts, I want to short the weakest names. If I'm actively looking for a long, I want to get long the best names. So right now I am liking Netflix, Bitcoin, and I also like MSTR. Couple names currently showing signs of relative strength. Then the key from there is you don't just go out there and blindly buy them. Build out that watch list, 2, 3, 4, maybe 5 names. Then you got to go look for your A plus setup. And, that's something is in the earlier part of your trading career. Big part of your early goal is just figuring out what is my A plus setup, and you figure that out through a lot of process of elimination, a lot of note taking, journaling. I'm a firm believer you only need one thing. I think it's tough to become really good at a lot of things, and a lot easier to call it a specialist. So we all got to have what we call our own A plus setup, and for me, that's always going to be a squeeze base setup. So let's go find an example at the moment, and that could be MicroStrategy here on the 30-minute time frame. And if y'all look over here, these watch list columns, I made my job pretty easy. I'm looking for either a red or a green A plus. And my definition of A plus is I have an active squeeze. And then while we're in that squeeze, I got the perfect score of 15. Compression from the squeeze, I take my momentum checklist, checking off all the boxes. I take my structure checklist, checking off all the boxes. I take my trend checklist, checking off all the boxes. Perfect score of 15. That makes for my A plus setup. But I don't want to go trade that in anything. Maybe a name like, let's go see. Maybe a name like, let's look at DoorDash. Negative 33, not terrible, not going to knock your socks off. Yeah, DoorDash could also get a really good-looking 30-minute squeeze. And they could have a perfect score of 15, check all the boxes. I want to take the one in a stronger name. And I really think doing that over the course of a series of 15, 25, 50 trades, that's how you can really come out on top. Okay. Strongest names on the board, the best setups. It's a really good combo. So in terms of the analysis of a trade, those are two things I'm always looking for. Did it rank out well on my spreadsheet? Did I buy it with my A plus moment in time? And for that, all I'm looking for is a white arrow down here on my squeeze histogram. White arrow means I got the structure, the trend, perfect score, everything lined up for a big push. If I can find that in a strong name, it's a really nice game plan to work. So a couple things in the works here, guys. If I take Netflix, for example, we definitely got one part of the equation. It's a really good relative strength name right now. Now, I'll admit I missed this move, but examples of things I'm trying to catch. Oh, I can't believe I missed that one. That's a poster child for the strategy I'm trying to work and the strategy I try to teach. 1 hour time frame, hourly squeeze, right, bunch of white arrows, trend, structure, momentum, everything lined up, and then you go check your spreadsheet. Netflix has a better score than every index, a better score than every name in the Big Ten basket. And now today, a better score than every sector. We can look at our master list, and with the 114, Netflix is, top 2, 3, 4 names on my board right now. So to me, that's the ideal moment in time. I've got the compression, all the energy getting built up, gearing up for a big push. It's the most important thing about that. It's a repeatable game plan. I can find that on a 5-minute chart for a quick day trade. I can find it on I can find it at 5 o'clock in the morning on a 2-minute time frame for the S&P futures, catch a nice move. In better markets, we find them on weekly charts, 2-day charts. They make for great swing trades. All right. Now, maybe Netflix is the weakest name on the board. We can short it. Same exact thing, opposite direction. White arrow pointing lower, negative 15. Combine that with a squeeze, it can make for a great flush. So if we jump to the Netflix weekly chart, which I think could be trying to make for the next big move, potentially. Keyword there being potentially. So notice back October of last year. What happened back here on the weekly chart? We got the white arrow. So everything lined up, locked and loaded. Stars have aligned. Big weekly squeeze. Find that on a 5-minute, 15-minute. It can make for a great intraday move. Catch that on a bigger time frame like a weekly chart. It makes for, I think, the best swing trade moves we get. So big push, pull back, and now here we are, brand new weekly squeeze. So I'm kind of chomping at the bit to buy Netflix here. Ranks out really well, making a big move, couple of buy signals. I don't have the white arrow just yet. What I do have here is my blue arrow. The blue arrow is called the slingshot signal. In plain English, that's a nice heads up. They're getting pretty close to getting the white arrow. Right, be a little bit more patient. You got to get that momentum cross. Could be today, could be sometime next week. Sometime very soon, they might give me my white arrow. I get it. I'm going to go check my spreadsheet. Is Netflix still a top 2, 3, 4, 5 name? If it is, I've got everything lined up for a big trade there. So to me, those two components, how can you take a list of 10, 15, 20, 50, 100 names, quickly determine, okay, these ones are neutral, these ones are bearish, and these ones are bullish. We can't be out there trading everything. So relative strength, really important. And then you want to narrow down, when do I go and trade these relative strength names? I've got my moment in time. We all got to have our own moment in time. It could be a squeeze-based setup. It could even be, it could be this. All right. I know a lot of y'all got the indicator. But if those two factors can be a constant presence in every trade you take, that's what I think over the course of a series of trades builds out that consistency. Very repeatable pattern. You wake up with a clear mission. I want to look for a long in this name. I want to look for a short in this name. And I know exactly what that trade will look like. I think that's big in a normal market. I think that's even more important in whatever you want to call the current market. So in terms of things lining up based on my criteria, I'm going to keep a really close eye here on the Netflix weekly squeeze, and you also have a 2-day squeeze here for Netflix. But if I go and buy it and take the early entry today, I'm breaking my rules. I've got the relative strength side of the equation. I don't have the white arrow side of the equation. And here's what can happen when you break that rule. So here's Bitcoin daily squeeze from a couple of months ago. I got my white arrow back here, the official trigger. And it kicks off a decent push. And then all throughout the squeeze back here, I never got it. And they're popping, they're going for a breakout. Couple of days there, Bitcoin looks really strong. I never got the trigger. Good example of how I broken that rule, got long before my trigger. I'm getting stopped out or getting caught up in a pretty big flush. So the blue arrow is a good heads up. I might get the white arrow, but a heads up is not official. So that being said, another name I'm keeping an eye on here is the Bitcoin futures weekly squeeze. All right, check the spreadsheet. We got GBTC with a 76 out of 120. That makes it better and stronger than these 14 other sectors. It makes it better and stronger than every Big Ten name except Netflix. Better than every index we have. It's good relative strength. So keep an eye on the weekly squeeze here. I'm not calling for when, I'm not calling for anything really, but if they can get another white arrow like back here, could be shaping up for a decent pop. So basic stuff, guys, but I think you can build a good career around the basics. Relative strength, really clearly defined A+ setup, and then just keep on working that with discipline. And this market can definitely test it. But if you got any questions on that, hit me up here in the chat. You want to look at any charts? Let's go take a quick peek at the action here. Yeah, it's a tough spot, guys. I might have to go to bed in cash and just behave myself, see what's up here tomorrow. We got a pattern playing out right now of we flush away from our 21 EMA, rally back to it. This is a daily QQQ, right? We flush, rally back to it. And the same thing happens, of course, on every rally. Too many people got short down here. They all get squeezed out, and then somewhere right around up here, the optimism comes back to the market. Right? Call buying picking up, people lifting their upside targets. Rejection, big dump, big pop, rejection, big dump, big pop, rejection. So I think it's really important if you're trying to call for longs here, fight that temptation to be the first guy or gal to do it. I think a better rule of thumb, wait for 2 good closes back above the 21, then maybe jump in and try to take it from there. Because this could be a case of, again, we flush, trap some shorts, we rally, squeeze them out. We're hanging out back below that 21 EMA. Nothing has really changed. If they could get a couple closes back above it, better action on a 15-minute, 30-minute, I think there might be a pop here back into about 480. which from a bearish perspective, I would love that. If I could wave the magic wand, which I don't have, but a couple more days of upside, play it long, get back to 480, smooch the falling weekly 21 EMA, can make for a great spot for some cheap out the money puts there. But I think that's my best advice for you. It's not a market where you got to be the first guy or girl to do it. Conversation's sake, we hold here, we stabilize, and yeah, QQQ goes 460 into 480. I don't think it matters too much if you buy it at 457 or 460 or even 465, 470. You may be a little bit late, but I think you're late to a better party. They can't hold here. We get a little flush. Could be right back down. So I think it remains a really, really great day trading market. Couple things are shaping up to look like good swings, but overall market maybe better for day trades. All right, quick peek here. 5-minute squeeze for Amazon. 30-minute, 15-minute, 5-minute MSTR. 30-minute, 15-minute Netflix. And then 15-minute NQ. No white arrow, so I would not trade it. We don't do such things. Yeah, it's too much of a... Looked like a better long up here at 19,100. So for those of you in my room, if we get a good pump into the close and we're getting good internal action, bunch of buy signals, good looking squeezes, we can parlay that micro strategy profit into an overnight trade, but I don't think we have to force it. No forcing. But all right, y'all, let me get caught up in the chat here, see what you got, and then keep on keeping on. Hey, what's up, Harry? Could we look at the Walmart squeeze on the weekly? Yeah. No, that's a great question. So the white arrow on my squeeze histogram, that's what I call my A+ setup. So get the 3 labels up here. Right. Trend label, structure label, momentum label. Those are my checklists. I'm looking for stacked EMAs, 21 above the 50, direction of the moving averages, all the above. So when I have a white arrow, like a MicroStrategy 30-minute chart, that means on that given time frame, the stock is actively in a squeeze, and I'm checking off everything on my checklists. All 15 of those different data points. So big 3 score of 15, green trend label, green structure, green momentum. Then that bad boy lights up, A+ setup. So if I look at the NQ 15-minute, I can look at the structure of the chart. I can go through my trend checklist momentum, or I can look down here and see the fact I have no white arrow, and then just sit back and do nothing until I get one. So great question there, Harry. And then, all right, Walmart on the weekly. Like everything else out there, earnings are creeping up on you. May 15th. So my version of the squeeze is a little bit different than the original. So on my end, I don't have any fresh Walmart squeezes setting up at the moment. It does, however, look like a spot where you might go into a new weekly squeeze. That'd actually be pretty typical. All right, big push, big push, big push, pull back, chop it, hang around that weekly 21. So none at the moment, but maybe getting one going there sometime soon. One name that does have a good looking weekly chart would be Mickey D's. This actually has a nested squeeze. So Daily squeeze inside of a 2-day squeeze, 2-day squeeze inside of a 3-day squeeze, 3-day inside of a weekly. Squeeze on squeeze action. I'm not going to buy it before earnings next week, but yeah, that's a beauty. Right, white arrow on the weekly chart, white arrow on the 3-day time frame, white arrow on the 2-day time frame. Then I go check my master list. McDonald's was number one last night. Um, if not for earnings in a couple of weeks, which can always be a total, total coin flip, total shot in the dark. I'd want to go and get long for a swing trade. Really, really solid. That Mickey D's. Yeah, Steven, gold coming off pretty good here. And the craziest thing about it, if you look at the monthly time frame, you're still about 6% above the third ATR target. So that green line right there, that's usually where I'm trying to take my profit. So you don't tend to see that too often. Crazy push. Which could mean room for a decent flush here in the short term. I mean that daily time frame, gold could pull back even to 295, down another 3%, and even that is a pullback to daily support. Right, nothing too crazy, nothing too devastating, and then you're only about 10% above the weekly 21 EMA. So yeah, it's been a beast. Definitely a nice move, but some signs of exhaustion here. She might be a little tuckered out. Fresh out of buy signals, 15-minute sell. Yeah, gold might have a bit more to drop there. So I like the idea of a put for that one. I like it. All right, guys, I think I'm all caught up here in the chat. Let's do one more walkthrough here of the squeeze watch lists. All right, there goes that Netflix. Flash in the A+ on the 2-day squeeze. Also getting a brand new daily buy signal. So let's see, 2-day squeeze on Netflix. And if I want to figure out why am I not getting the white arrow yet, then I can look up here at my labels. Trend is good, structure is good. We're waiting on momentum. So we can get momentum on board if we can get the MACD line back through 0. Then we're getting the white arrow, and then yeah, that's when I want to buy on a dip or buy on a lower time frame squeeze. Patience. All right, back to the QQQ. Yeah, tough call here for now, guys. They could hold it, they could stabilize, get a push going. Could also break it, get some sell signals, and kerplump, right back down she goes. So I think for both longs and shorts on the indexes, fight that temptation today to be the first one to do it. I'm a lot more inclined to wait for a long, maybe with a second close above that 21, couple more buy signals, better internals. Let's go check the VIX here. VIX is trying to become a little bit more helpful. Keep it under 30, get a couple of sell signals going, maybe a bit lower there for the VIX. Yeah, so Abdulaziz, that's a great question. Is buying options in a squeeze not like donating money to the market? Yeah, great question. It certainly can be. And that can be in situations where one that comes to mind initially would be that example of that weekly squeeze on the Bitcoin futures. And that's why I went from the the TTM squeeze, a squeeze pro, and kind of built my foundation on the squeeze itself. But then I quickly figured out that the squeeze by itself is great at doing one thing, and it's great at giving you a big heads up. There might be a big move sometime around the corner. But just that squeeze by itself doesn't really tell us too much about the timing of that move and too much about the direction of that move. That's been my whole effort. Can I find a squeeze where when I jump in, when I pull the trigger, it's just about on the verge of waking up and breaking out. And that's why I had to build up that structure checklist, that trend checklist. And I kind of got there through reverse engineering. I would sit at my desk, I would print out as many examples of really explosive daily squeezes I could find, and then study every detail. Okay, so when they break out and they fire long, what is my 21 EMA doing? And I found it's usually pointing to the upside and above the 50. Okay, when they begin to fire long, what is my 50 SMA doing? Well, it's usually above the 200 and also trending higher. And they've got the MACD above zero, and they've got the stacked EMAs, all that other criteria. But to your point, if we're back here buying, this is Bitcoin futures, of course, but imagine this is Google. If we're back here buying Google calls and the squeeze starts back here, late June, and then the thing does nothing until early November, yeah, we're burning cash. Unless we're buying calls with a year out to expiration, yeah, we're getting caught up in the chop. And I love the squeeze. I built my entire career around the squeeze. I'll be the first to admit, the squeeze by itself is just a glorified chop fest. Right? It's just a heads up. Things have reached a point of compression. That's all that tells you. So I think a good exercise for all of you, if you like to trade the weekly squeezes, it could be an hourly squeeze, 15-minute squeeze. Make it a weekend exercise. Go study as many examples of that given time frame as possible. Go find 100 examples of 15-minute squeezes that broke long. Try to figure out every little detail. You want to take it a step further. If your favorite time frame is a 15-minute squeeze, go print out 100 good examples of 15-minute squeezes, and then go study the 5-minute time frame inside of it. Then you'll find even more pattern recognition. All right, so when a weekly squeeze breaks long, it's the weekly chart doing one thing, and then the 3-day chart doing another, the daily chart doing another. And that's how I think we can take that compression pattern, get to a point where we can look at it and say, all right, one, this should fire to the upside, and two, this should get going sometime soon. And I've even found for a lot of our trades, after we get long or short, if they don't get going that day or the next, is usually a problem. So that's a great question, though. That was my pain and suffering when I first started with the squeeze. I would find one like this one. I would buy a 30-day till expiration call, and then a week goes by, 2 weeks goes by, I'm down 50%. Nothing's happened. Right? We're not breaking down, breaking out. We're still in a good squeeze. And then I'm taking a max loss. I then go and short it. And a week goes by, 2 weeks goes by. We just keep on chopping. So yeah, if you're a squeeze trader, I know a lot of you are. That's a great exercise for a weekend project. Take a couple of your favorite time frames, find examples of squeezes that broke short, find examples of squeezes that fired long, and then find examples of ones that failed. Looked like they wanted to break out, turned the corner, broke short. Looked like they wanted to break short, turned the corner, fired long. And you're looking for those. As JC would say, history doesn't always repeat itself, but it often rhymes. And I've really found that to be true with this one given setup. Is it always exactly the same time frame to time frame? No, not exactly the same. But are a lot of those same trend, structure, momentum principles always lined up? They tend to be. So that's a great question. And then Harry, watching the XLU alongside a few energy stocks, CMS being one. Can we take a look at that? No, man, you're not asking too much. This is fun for me. All right, CMS. What do we got here? So just from a squeeze only perspective, right now we have a 3-day squeeze, a 2-day squeeze, a daily, a 4-hour, and a 2-hour. Before thinking about up, down, left, right, and when, that tells us one really important thing. It's fixing the bust and move here sometime down the road. Think of that like a coiled spring, or back when you're a kid, you're in a swimming pool, and you take the beach ball, you hold it underwater, all the pressure builds up, you let go of the ball, and boom, it comes popping out of the water, it jets up into the air. Think of a squeeze kind of like that. Compression followed by expansion. We have compression on 1, 2, 3, 4, 5 bigger time frames. So from that, we know there's a decent chance it's gearing up for a nice directional move here sometime soon. And then, going a little bit deeper than that, as an options trader, the beauty really is they can make for, excuse me, they can make for bigger than expected moves. You're kind of catching the market maker off sides. So if I buy some CMS calls right now, in the chop, we're not breaking out. Nobody's really too excited about it. If I can buy them right now when everything lines up, imagine the squeeze goes and fires, and we're pushing into, 79 to 80 bucks. I do that for, say, 40 days out to expiration. The market makers might not be pricing in a $70 move. Or, yeah, I can guarantee they're not going to price in a $70 move. They might not be pricing in a $7 move. But my squeeze says you've got trend, you've got structure, you're locked and loaded. If I fire, I might get you up towards that third ATR target, 79, 80 and change. That's the real power of it. A great example was the Apple weekly squeeze we traded last year. And not to say you can't buy it on the breakout, you can't buy it when the squeeze fires and catch a good push. My goal is always get position before the squeeze fires. JC calls that you're feeding the ducks. So I'm going to buy a call back here for $2, right? When I'm getting my white arrow, before the big breakout, before the big pump, before a big spike in implied volatility. Right, I want to buy it down here for $2 and change. Sit back, let the squeeze fire, and then on the big breakout towards my target, those calls are going for $4 to $5. And now here comes all the breakout buyers. Here comes all of the 52-week high scan traders. Everybody talking about it on Twitter. I want to feed the ducks. Right? They come waddling up, and okay, y'all can have my call. I bought it for $2. I'll give you a discount. Right? I'll be fair. I'll give it to you for $5. And then, hey, maybe Apple keeps going, or maybe it pulls back, and I wait for a white arrow, jump back in. Keep that vicious cycle going. But as you can imagine, once Apple's up here 242, 245, it's breaking out. It's getting movement going. You can still catch a great move, but from an options pricing standpoint, the sweet spot is usually within those Keltner channels. Which I'm not sure if you guys and gals can see those, but let me go do this. So these pink lines are Keltner channels, and they measure an average true range move. All right, so one ATR above my 21 EMA, and then one below it. From a bang for your buck perspective, that's a really good buy zone. Right, somewhere above that 21 EMA, within that +1 ATR Keltner channel extension. Break it out, push, looking for a push to about 3 average true range moves above that 21. Take profit in to keep it moving. So going back to what was that, CMS there. That's what I like about it the most. Not just the signal, where the signal's taking place. And then better yet, maybe you're not an options trader, you might be an equity trader. I want to buy it near my 21 EMA, and I want to play for a push towards that third ATR extension. If I can map that out before I even enter the trade, I've got a great sense of my overall risk reward. So I could jump in, buy it around 72.70. I'll round up, call it 73. I'm looking for a push into 79, so I'm getting about 6 points of potential reward. And in about 9 times out of 10, I would cut that trade loose on a close back below that 21. So I can buy it around 73. I've got about $6 of reward. And then I may be cutting it down here around, 71. I like the game of risking 2 to make 4, 5, or 6. And I think on a trade by trade basis, if you know you're working that kind of number, it takes off some of the pressure of every individual trade. If I can put myself in spots with really clean squeezes, really, really good alignment in good, strong relative strength names, and then work that kind of entry, I don't need a 90% win rate to survive. I don't need an 80. I don't need a 70, even a 60. What we found in my room going back to last summer, we're pretty consistently in that 70% win rate neighborhood. But look for entries where you don't need that, if that makes sense at all. So I like it a lot. Very solid. Very, very solid. And now my trigger would be, all right, if I'm going to buy that 3-day squeeze, what are characteristics of 3-day squeezes that have fired long in the past? They all have 2-day buy signals. They all have daily buy signals, etc. So if we go look at, say, excuse me, let me go find a good example. Who's had a good 3-day squeeze recently? Not Netflix. Let me go find one. Maybe Google, not Nvidia. There we go. Okay, so back in May of last year, right here comes a 3-day squeeze for Nvidia. Picture perfect, white arrow. What that one time frame does by itself is just tell you the stage is set for a big move. I've got the squeeze, I got the structure, all the bells and whistles. I'm gearing up for a push towards that target. So think of that one time frame all by itself like a big piece of dynamite. And if we got a piece of dynamite in front of us and no lighter, no match, nothing to light the fuse, nothing's going to happen. If we can get a lighter, get a match, light the fuse, then the dynamite goes boom. So to me, the lighting of the fuse comes from buy signals inside that time frame. If I'm gonna if I want to get long on a really good 30-minute squeeze, I'm gonna take that 30-minute time frame, quote unquote, pop open the hood, check my 15-minute time frame, check my 5-minute, make sure they're aligned for a push higher. Imagine we have a 30-minute time frame with buy signals, good looking squeeze, and then my 15-minute and 5-minute have a sell signal. That's a lack of alignment. So if you look back here on Nvidia, all right, this is late May of last year, really clean 3-day squeeze. All right, and now if we go open up a 2-day time frame. It's a little bit tricky. It happened on a gap, but on that gap up, your 2-day time frame finally triggered a buy signal. And now that time frame beneath the 3-day chart is in good alignment. So, picture the 2-day time frame shouting up to the 3-day time frame. All right, I'm bullish, I'm aligned, I'm locked and loaded. Let's go for it. If the 2-day time frame had no buy signal, or even worse, had a sell signal, we're not getting that alignment. Better example from a couple of days ago would be, let me go do this. So here's a Bitcoin futures when we got long the other morning, which was right back here. So here's a 1 hour, 30-minute, 15-minute, 5-minute, 2-minute, 1-minute. Okay, so that circle right there, that's when I bought it off of the 1 hour time frame. If we take that 1 hour, pop open the hood, here's a 30-minute chart inside of it. 30-minute squeeze, 30-minute white arrow, buy signal, all the above. So 30-minute time frame says up to the hourly, I'm locked up, let's go for it. I got that good stuff. 15-minute Bitcoin, buy signal, white arrow squeeze. Right now that shouts up to your 30-minute. Go tell the hourly I'm also on board. 5-minute Bitcoin futures back here. Right, all throughout that push before and after. 5-minute chart, buy signals, nice squeeze. The squeezes aren't a requirement. The alignment is. So if I'm going to buy a 1 hour squeeze, I ideally want a 30-minute, 15-minute buy signal. So that way, if I'm going to go buy a 3-day squeeze, like that CMS, go back here. Right, take my 3-day squeeze. I got the white arrow. Okay, cool. Stage is set for a move potentially into 79. Now, do I have the alignment? So I check these labels over here in this corner. And if they're green, that time frame is bullish, or active buy signal. If they're red, active sell signal. Blue is just neutral. Neutrals kind of hurry up and wait. So if we take the 3-day squeeze, pop open the hood. My daily chart is neutral. My 4-hour chart is neutral. My 2-hour, 1 hour, 30-minute, 15-minute, 5-minute, they're all neutral. And I'm not saying to go and buy the 3-day squeeze, they all need a buy signal, but you're looking for signs of alignment. A couple of soldiers here from the ground up saying, all right, we got the structure, the trend, all the pretty colors. We can now help you take that 3-day squeeze, go and get the job done. If tomorrow morning we end up getting a 30-minute, 15-minute, 5-minute sell signal, that's even more evidence. Yeah, you've got a great looking 3-day squeeze. It's not aligned for a push just yet. So going back to that previous question, how can we avoid burning our cash sitting in a squeeze for too long? That's a big part of it as well. A plus on one time frame, alignment across the other time frames. Makes for a really, really good combo. So great questions here, guys. And then, let's go look at the utilities here. Check the indexes real quick. QQQ, and they're fighting. They're fighting a fight. And then, XLU weekly chart. You get a few squeezes here: a weekly, a 3-day, a 2-day, and a daily. Now I can quickly look up here and not locked and loaded right now. Neutral weekly, neutral daily, neutral 4-hour. They do have a 1-hour buy trigger. So if we go check the weekly squeeze, it leans in the favor of the bulls. 8 points out of 15. Bull trend, neutral structure, bear momentum. So it's decent. It can get a lot better if they go and get the white arrow. If we drop down to the 3-day squeeze. But here's a beautiful thing. It might not be, picture perfect, locked and loaded today. It's to our benefit, guys. Find these things nice and early. Keep them on your watch list. Watch them develop. Next thing you know, you're getting a 30-minute buy trigger, 2-hour buy trigger, 4-hour buy trigger. You begin to work in, begin to build up that position. Not 4 weeks down the road when it's breaking out above 85 and change. So finding them early is nice. Trading them early can be a little frustrating. 3-day squeeze has a 0 out of 15. Pretty much up for grabs on that one. And then 2-day squeeze here would be a 2 out of 15. But one I would keep an eye on, right? One thing's being communicated right now. Energy is being built up. Weekly, 3-day, 2-day, daily time frame. It might be later next week. It might be in August, September, November, December. At some point down the road, they will begin the fire. That could be long. That could be short. Just sit back, watch your signals, watch it all develop. Again, to your benefit, you're finding it now and not all the way up here or all the way down there. That's when the ducks come waddling in. And then before I let you guys go here, what I would do if I got a good looking sector, you can go to etfdb.com and we can search XLU. And then looking through a few of the holdings here. So you've got Nextera, SO, Duke, AEP, and I'm pretty sure these are highly ranked on our board. Yeah, there's Duke, there's AEP, so yeah, SO. They are ranking out pretty good. XLU has a 56 out of 120, so that's climbing the board. Climbing the leaderboard. All right, let's go look at a Nextera. Little bit more of a pop here in the Qs. Wow, lot of 15-minute squeezes coming through. And if they can turn into 15-minute squeezes with white arrows, could be some end-of-day action there. But okay, so let's go look at Nextera. See, SO. SO looks pretty good here. Yeah. Oh, yeah. 3-day squeeze going, 2-day squeeze going. Not too shabby. There's Duke. Dupe, great looking 2-day squeeze, really good looking 3-day squeeze. All right, good looking squeezes, relative strength names in a somewhat relative strength sector. Good combo if you ask me. But all right, y'all, I'll let you go here. I gotta take my dog for a quick walk and then hit the road for a bit. But yeah, for those of you in my room, let's see, it's about 2:30 here. I would like to give the market about another hour. So let's get about 30 minutes out from the close. Then we'll check the QQQ. Are we firmly back above that daily 21 EMA, or are we just kind of right on the cusp? If we're right on the cusp, I might hold off on any more trades. If it looks like a stronger close, better internals, then I'll look over here. Plenty of 15-minute squeezes, plenty of 5-minute. Maybe a couple of shots here overnight. So I shall keep y'all posted. For the rest of you, appreciate your time as always. Thank you for being here. Hope a few of you found it helpful. And yeah, put that on a piece of paper and try working that theme over your next couple of trades. Relative strength, A+ setups. And one more time here, I'll grab the link for my Big 3 sheet. And if you want to follow along with that and see what I think is relative strength, save that link, make a shortcut on your desktop, and I'll keep on updating it. But thanks, y'all. Have a great day, and we'll talk soon. Adios.